Hi everyone. As she said, my name is Halie Corbitt, and I am the Family and Consumer Science Agent in Columbia County. So if y'all are actually housed in Gainesville, I'm about an hour north of you. It's like city is the city that my office is in, and I work for IFAS Extension. We'll talk about what that is in just a minute. But I also like to talk about family and consumer sciences. So this is well, to be honest, this is a big piece of what I do for the first part of the year. I do taxes. And then the rest of the year, I do all kinds of classes related to financial management, health and wellness, food safety, all those kind of things. So I'm kind of well-rounded. I have a bachelor's in microbiology and cell science, and then I have a master's in public health. And then the reason I'm qualified to teach you this is I am an accredited financial counselor. So like I said, kind of well-rounded, and I do kind of all the different areas in my county, and I also help serve some of the surrounding counties because there are not FCS agents in every county. There is an extension office in all 67 counties, but there's not one in my specialty area. So today we're going to talk about taxes. All right. Yes, I know for some people this is a very scary word, but honestly, it's not as bad as you think. I will tell you the new change to the W-4, which actually happened in 2020, but because they changed it in 2020, a lot of people didn't realize, and the effects are slowly showing in people's taxes instead of an immediate. So that change has been a little bit different for some people. So if you're really worried about your W-2 or haven't had the right taxes taken out or owed a bunch, it could be your W-4 that's causing you issues, which is your withholding form. And I'll show you that one too. So we'll talk about some of the little pieces that go in. But let's start with the basics. So I told you I'm with UF-IFAS Extension. So our job within Extension is to take the research that is done at the university and give it to the community in a way that is actually usable and understandable in their everyday lives. So you're probably thinking, okay, what? Well, I don't mean this rude at all, but a lot of people do not understand actual research data or research conclusions or any of those kind of things. So when it gets to the general public, they're like, okay, that's great. We have a high rate of obesity. What do we do about it? That's kind of how they look at it. So extension was designed, and we're in all the states throughout the US. There's an extension office or an extension university and hub. So we are there to help make that connection between what the research says and how people can use it in their lives. And so that's exactly kind of a thing here. Finances are something that we all have to deal with. Everybody deals with money. We all have to know where it goes, how it comes in, all those kind of things. Well, did anybody teach you? For some of y'all, the answer is going to be yes. My parents taught me, I was taught in school, there's all these answers. But I don't know if y'all know, there's a generation that they took it out of the schools completely. Now it's back in, so hopefully it'll go better. But those pieces were missing. So this is a place, or Extension is a place that kind of helps with that. We also fill in those gaps, but then we also elaborate on them. So, like I said, if you've ever heard of, or Extension does a lot of different things. The one that most people have heard of is 4-H. Has anybody heard of 4-H? That's probably our biggest program that everybody hears. It's the one that focuses on youth, but we also have ag agents for gardening, for livestock, for natural resources, everything. And like I told you, I kind of cover after it's grown or developed. I'm the one who kind of helps you consume it, hence the name Family and Consumer Sciences. So money, food, any of those kind of things. All right. So your taxes. Here's the thing that I like to start with because I want you to realize this. I do taxes. This is my 6th year doing volunteer income tax assistance, and I will tell you that even the people that come in with exactly the same sheets of paper, their taxes never look the same. Okay, just because you come in with the same forms does not mean your taxes are going to look the same. Just because your friend has 2 kids just like you, works at the university like you, does all those things, does not mean your taxes are going to look the same. Everybody's is going to look a little bit different. So the reason I say this is because today I'm going to give some very general information, and then if you need help with like specific tax things, I'm always here to help with questions and that kind of thing too. But just remember, your specifics are literally to you, but we all have general forms and things that we need. But also, has anybody's taxes ever looked a little different from year to year? For most people, the answer is going to be yes, they're going to change a little. And that has a lot of variations in the background having to do with standard deductions, having to do with cost of living adjustments, all of those kind of things. So it's very rare that your tax return stays exactly the same, even for yourself from year to year. So imagine from person to person. So my first question I always ask, and we're early in the year, so my guess is most of you probably have not, but I always like to remind you, if you haven't completed your taxes yet, the earlier you do it, the better. It's less stress for you, less waiting for your refund if you're going to get one. And it also, helps just make sure you have everything. Now I know you have to wait for all your papers and everything. So if they're not in, don't file yet. You know what you need and don't try to get ahead of it. But the tax deadline for the year for federal is April 15th, 2025 for most states. But in the state of Florida, we had a lot of hurricanes this year. If you live here, I know you know what I'm talking about. So they have actually extended our date to May 1st of this year. So you have to make sure that they're filed by May 1st, or you have to make sure you file an extension if needed before that May 1st deadline. I still wanted to leave the April 15th here because if you get them done sooner, it's always a better outlook. But you do have until May 1st this year in Florida. But if you're in any other state, your deadline's still April 15th. All right, so now let's talk about taxes in Florida. So I always like to start with, in Florida, we're one of, I like to call the blessed states, because we are one of the few states, or it's a little over a handful of states that do not have state taxes. Now our neighbors just north of us and also our neighbors just west of us have them, but we do not. So I do some Georgia taxes, I'll tell you, and see how their system works. But in Florida, we don't have state, so we only do federal. So you're probably wondering, well, what does that mean? Well, the federal system is kind of pretty basic. It uses brackets and taxes your money based on how much money falls into that bracket. That's the bracket system in a nutshell. Okay. I like to tell people that too, because I get lots of questions every year about what is my tax rate? Well, I can give you an average of your tax rate because it'll tell me how much was taxed at each level, but actually your money is taxed in different brackets, so you don't have an exact percentage that you can do your money at to figure it out. But I'll give you some advice on the withholding thing too. And then also, tax returns are required yearly. It's always, and this is always the fun thing, because I had somebody already come this year and they're like, I couldn't find my papers for 2025. Your taxes are always done retrospectively, meaning that they're done for the previous year. So in 2025, you'll always do your 2024. In 2026, you'll do your 2025. The idea behind that is you can't predict how much money you're going to make or anything in that year. So you have to wait till the year's done before you can file. And people are like, oh, I have the same job. I've been doing it the same year. Yeah, but you could get a raise. You could change jobs. You could get a promotion. Something could happen in your life and you have to do something differently. There's all these factors that play in. So it's always after the fact. And then also, most of us, our taxes are automatically deducted on our paychecks. Okay. If you have a W-2 or if you're retired and have a 1099-R, there's always going to be that category that says federal taxes withheld. So most of the time, we already have those taxes paid for us. The issue sometimes can be is making sure that they're at the right rate of paying. So with that, you'll either have overpay, where you paid a little bit too much and get a refund, or you'll have underpaid where you have to send in money. And then there's the other one that's really hard to do actually, and it's called breaking even, where you don't send anything and you don't get anything. But there's two kind of ways to look at that. So if you overpay by a bunch, okay, then you're giving the government a tax-free loan. And the reason I say it that way is because the government does not pay you interest on that money. So it's sitting there all year if you overpay, and then you get it back, which some people use as a savings account, but you didn't gain any interest on it. And then the underpay is where it can get you, because if you underpay to them, you have to pay them back. But guess what they charge you? Interest in order to pay them back. And if it's over a certain amount, you get a penalty. If it's late, you get another penalty. So there's all kinds of things. So trying to find that sweet balance is where you want to be. And it's not as hard as you think. It just takes a little bit of time to look at your income and all the other things that go with it. So let's start with some of the basic things. So standard deduction. So this is the chart for this year. This is the standard deduction chart for everybody. So depending on which category you file in, so your filing status will depend on your deductions. There's also where you see the different numbers, has to do with things like they ask questions about being blind or if you're over 65 or permanently disabled. All of those kind of things make these numbers change a little different. So you typically get a little bit more if you have some of those things. But it's good for you to just kind of know the standards to go. Standard deduction for many, many years was a lot lower. I think it was 5 years ago is when it essentially doubled, and I'm not saying to the exact penny, but it doubled, and so it became bigger. What that means is you're still getting that deduction where you used to have to itemize. If anybody has any idea what that is, where you had to keep up with all the receipts, you had to put in your mortgage interest, you had to put in all those different categories. It's not that you're not getting that benefit anymore. You're just getting that benefit without actually having to put all that information in there. But I like to share that because mortgage interest is still a tax form that we get. And for most people now, it doesn't actually go on your taxes because the standard deduction is just higher than what your mortgage interest is. Or when you add your taxes, your sales tax, all those. So sometimes you can itemize, but sometimes it's best to go with the standard deduction. And almost all systems now that you file under will automatically choose whichever one is the best for you. So just know that. Also, there's credits and deductions. So this line gets a little blurry. It's supposed to be credit means you can get the money back, and deduction means it just reduces your amount of taxes. That's the plain version. But I'll tell you from doing taxes, it gets a little distorted in there when you're explaining. For instance, the child tax credit. So the child tax credit is a deduction and a credit, even though it has the word credit on the back, because a portion of it is used to reduce your taxes, and you can only get so much back as credit into your hand or into your pocket, okay? So there's quite a few that kind of play on that line. I just like to give that example, but the idea is still the same. If it's a deduction, it's going to take off the amount of taxes you owe. If it's a credit, it generally puts at least something back towards your pocket. Now, if you owe so many taxes that even after the deduction and the credit, you still owe more taxes, that you're not going to get money back in your pocket. That's just how that balances out. But know that that's the concept behind it. So tax returns, these are your forms, and this is when you go get a new loan, when somebody asks you for your tax returns, anything like this. This is the form they want to see. So these are two forms that are exactly the same. One's a 1040, which is what most working people use, and then there's the 1040 SR, which are for seniors. So if you look at them side by side, they look pretty much exactly the same, and honestly, they pretty much are. There's very few minor differences between them. This is normally a 2 to 3 page document. This is the first page. I did not put all the pages here for you to kind of see, but this is where you're going to find your AGI. So like right here, and I don't know if it's going to let me mark. It will. So right here, it says adjusted gross income. This is your AGI, that when you're typically asked what your AGI is, your adjusted gross income, we see this a lot. So I like to point this one out. So you could have deductions above the line, and then you're going to have that standard deduction or the itemized deduction below, and then you're going to get to your taxable income. And then the next page actually talks about that percentage of tax you have to pay. So this is just kind of the basic, but I like to show the adjusted gross income because we do get that question a lot on many things in life. All right, so these are commonly seen 1099. So this is a tax form that you would bring to whoever's preparing your taxes, and there are many different ones that are out there, and this is just a few. So don't think that this is the end of what is. So you have a 1099 DIV, a 1099 INT, you have a 1099 SSA, which is Social Security income. There's a 1099G, which is can be like gambling income from the state, or it can be unemployment compensation. You have a 1099 miscellaneous. So I like to stop on that one because a lot of people get those if they do any type of work where they don't have benefits, or even like our OPS people at UF, a lot of those are paid their 1099s. The thing that you need to know about those is most of the time your taxes are not taken out automatically. So you need to be able to be prepared at when you file your taxes to pay the taxes on that money that you earned. So you need to set them aside. Some organizations you can request that they take out the taxes and they will, but if it's just a 1099, most of the time it is not taken out, and that's considered self-employment type work. Another one that I like to talk about are I want to say there's more than these 1099s here. So I've listed some of the names and the more common ones, but know that there are a bunch of different 1099 forms out there, and also they don't all look the same. My favorite one, if you want the truth, that varies so greatly is the 1099 INT, which is your interest statement. So we get a lot of these from our banks. Some of them will look like the one in the top corner here, but a lot of them are actually going to just look like a typewriter kind of sheet of paper where it's just going to have box one, interest, like those kind of things. There's not going to be like true boxes that tell you about it. As long as it is the end of year interest, that is still the correct form and there's nothing wrong with it. I just like to point that out because each one does look a little different. So don't get stuck on these are the IRS formatted forms, but that is not how all companies do it. So W-2s, this is, and I will say honestly, for almost all W-2s I see, they do keep this general format. This is actually the one form that I see that pretty much always looks the same, okay? Now, you normally have multiple of them on one sheet of paper, and there's multiple copies. Most people are always like, why are there so many copies? Well, if you remember, we used to do our taxes where we actually wrote them on paper and we had to mail in a copy of all of those forms with our tax return. Now, most of it is digital, which is nice, but they haven't stopped giving those extra because there are still people that mail their taxes in. So you have to have that to be able to do so. So know that. On this one, most of the time you're going to have your social security number. Sometimes instead of a social security number, they'll have an employee ID number, but it needs to be able to match your employer's name, how much. Box one will be your wages, how much you made, and box two is that federal income tax withheld. So that's what you really want to pay attention to because that's what's going to go in the system as your federal taxes already paid. This also shows up on every pay stub that you ever get. You can look and see what your wages were, and there should also be a category somewhere on your pay stub that says federal taxes withheld, social security wages withheld, social security tax withheld. All of those kind of things are going to be there, or not social security wages, social security tax withheld, and Medicare tax withheld. All of those things should be there, and you want to make sure that they are, and you really want to check them. So like I would actually advise, we just started a new year, we're in February, I would go pull your pay stub now and see about what's coming out for as federal taxes and your social security tax and all that, and make sure that it's not something that's like $25. That's probably not enough to cover your money that you're making. But we can also talk about how you can predict that too. I have a tool that will help you do that. The next part is that withholding. So how do we determine how much withholding we should have? There's a lot of factors that go into it, but this is the tax required form. This is the IRS required form, your W-4. Whether you realize it or not, when you started your position, if you have a full-time position that is not a temporary, that would use a 1099 or anything, you receive a W-2, you are required to fill out a W-4. This is the form that used to be, and I know if you think back, you'll remember that 0, 1, 2, 3, 4, where you chose that number, and that's how it based the taxes come out of. This is that same form, but they updated it. Now it asks you about multiple jobs. It asks you about your children on the form, if you want to make any other adjustments, extra withholdings, all of those kind of things. So this is something that if you are part of a UF employee, it is on our My UFL page, and you can go in and answer these questions just like you see on this W-4 sheet. The sheet does not look exactly the same because it's in our web-based system, but it has the same questions. So you just want to make sure that you're answering them. Well, you're probably thinking, how do I determine what I withhold? Well, this is my favorite tool to help you do that. Okay, so I actually can send or will send Miss Patricia these we call them fact sheets in extension. So I have quite a few fact sheets related to taxes and money, and I'll send her links so she can hopefully share them with y'all as well. But the withholding calculator is the easiest way to do it. So you're really going to go in, it's an IRS thing, and go in and put in estimates of how much you make, how much your spouse makes, if you have children, if you have more than one job, all of those kind of things, because it does make a difference. I'll give you a prime example. My taxes look completely different since I started working with extension than they ever did before. So as an extension employee, I actually receive two paychecks, even though it's one position. I'm paid by the county and I'm paid by the state. So on that last page where it asks that multi-job thing, I have to mark that because my money gets taxed different, because even though it's one position, tax-wise, because I received two W-2s, it is considered two different jobs. So this withholding calculator was great to help me determine how much I actually need to withhold from each one to make sure that in the end, it all balances back out. Also, I'm married, so putting my husband's money in here also made sure that it balanced all that stuff out too, so neither one of us were left wondering, oh my goodness, how much are we going to owe? What are we going to have to do? So now let's get back to your actual taxes. So this is another one that I get a lot, is ways to pay or ways to receive my refund. So I will tell you, the IRS is majorly pushing that refunds are direct deposited. You're probably thinking, well, why would I want to go with something that they're majorly pushing? Honestly, because it's easier for everybody, and that's why they push it. You simply give whoever does your taxes your routing and your account number, and they deposit the money right into your account. You have to give permission, let me be clear, because you can have a direct debit where you directly pay from your account, but you have to actually give extra permission for that. So just because you're giving them your routing and account number does not mean that they can now withdraw from that. It's a whole different set of permissions. And when you direct pay, you're only allowing them to pull the one set of amount. And it even says that in the paperwork that you sign. So just know that. If you do have to pay and you figure out that you're having to pay on a more regular basis from year to year, there's a couple things you can do. One is you can adjust that W-4 to help make sure that you are withholding enough. And the other is you can make estimated tax payments. Sometimes this is required, especially if you have your own business or something maybe else on the side, or your significant other runs their own business. These estimated tax payments are how you protect yourself from owing that big chunk of money at the end. Because most people, if they're self-employed, are going to get those 1099 forms, so there won't ever have been any taxes paid throughout the year. So you always have the option of paying the IRS ahead of time instead of being penalized on the backside. And that's actually what they prefer. Now, there are people that get to the point where they didn't realize that they were going to pay as much. They didn't check their pay stub through the year. Maybe they swapped jobs and something went wrong with their tax withholdings. There's so many things out there that could happen. So there are ways that you can do payment options in order to pay them back. Also, another little tidbit for you to know, your taxes are due on the day you file. So I told you it is a very good idea to file early, and it is. But if you know that you're going to have taxes due, you can wait till later in the tax season to save up to make sure you have that money to be able to pay. But the moment that you actually file your taxes is when that clock begins and they think your money should be paid to them. So that's when that interest starts, that's when that penalty starts, all of those kind of things. So just, keep that in mind as the individual. You do have some ability. They also do have different payment options where if it's a really big chunk of money, you can work to pay it back it's not interest free, you'll pay interest, but you can pay it back with a credit card, you can pay it back with a payment plan. There's all of these things. So don't ever let it be like, I'm just not going to file, because if you just don't file, the IRS is going to send you a letter and still require you to pay the money. So don't think that you're going to get away. As I say that too, if you ever file and then later get another form in the mail and it's going to change your tax return, you definitely want to make sure that you file that amendment or that you call the person you filed your taxes with, because if not, you will get a letter from the IRS telling you that they adjusted your taxes. Most of the time they'll ask you if you approve, but sometimes they'll tell you that you have to refile if it's a significant amount of money. So always make sure that you have the forms you need before you actually go file. This is another one of my favorites. So if you're getting a refund, it's very exciting, right? And everybody always wants to know, where's my refund? Well, here's what I'll tell you. Once whoever prepares your return hits that button that e-files it and sends it away, or you mail it in, whichever one, none of us have any access to giving you that money any earlier. It has to wait for the IRS to approve your return and to send that money. So the best way for you to figure out where your money is when it comes to your refund is irs.gov/refunds. It actually has a thing, you put in specific information to you, and then it'll tell you where it's at in the process, whether it's been approved, whether it's pending, all of those kind of things. And it'll tell you when it deposits, or if you still prefer the mail check, it'll tell you that. Do know that your refund can take up to direct deposit over 21 days, and that's business days, not calendar days. And then if you get a mailed check, it's at least 6 weeks, if not more. So that's why they definitely recommend that direct deposit piece. But the answer, if you don't know where it is or you want to know where your refund is, I hate to tell you, it's not to call your tax preparer. It's to go right here to irs.gov and /refunds and check where it is for you. We have no access to any of this. So as you're getting ready for your taxes, don't let them overwhelm you. Okay, you know what you did last year. You have a pretty good idea. I talked about 1099 interest statements. So we get those from our bank. But know that most banks will not send you one if it's less than $10. So if you know what your interest is, you can report it. You should always report any income that you have of any kind to the IRS, even if you don't get a form. But know that if they didn't, it may not have been big enough in order for you to need to report. I had one this year that did receive one, and it was for $1. So I have a feeling it cost the bank, or I don't remember which financial institution it even was, it probably cost them more money to print and mail that than it did for the person to put it on their taxes, because it only adjusted their AGI by $1, which even in the tax realm of things is not typically enough to make a big change to the taxes that you owe. So that's why they kind of play with those numbers. So know that. These are different documents that you can use to help prep. So you have just basic income documents we talked about. Ghost tax preparers, that's one of the ones I like to make sure. Those people that just randomly pop up this time of year, unless they're linked, like I'm called VITA, Volunteer Income Tax Assistant. So I'm actually a volunteer through the IRS. But those kind that just kind of randomly pop, just be careful, because some of them, if they've been doing them for years, you know, people, that kind of thing, that's okay. Like that's probably some of it's trusted. If they're a CPA, those kind of things. But if it's just a random person that pops up and does taxes, be careful, because they might be skimming some of your money off the top. They will change those routing and account numbers and make them their own instead of yours. So just be careful of those things. And then the last part, the one you see on here, is a Schedule C. So this is for those self-employed individuals, and there's always going to be self-employment tax. So there are different things you can do to help reduce that sum, and this kind of lists those things that you can claim in order to help reduce it. So tax preparation, who's going to do your taxes? Well, there are a lot of free resources. I'm telling y'all this now because I know H&R Block is out there, and Jackson Hewitt, and heck, I can't think of all the others at this moment, but there's a bunch of different ones out there, okay? And if that's what you want to do, that's fine, but know that there are free resources that are available to everybody out there. So the first one is VITA, which is Volunteer Income Tax Assistance. So it is volunteers that are governed by the IRS and that provide free tax services. So I actually do this with Extension every year, and there are multiple county offices in Florida that also do the same program, and we partner with the University of Georgia to provide this program. So you can always go on IRS free and look for VITA sites. You can look for the direct file. You can look for IRS free file online. There's so many different things. AARP is the same type program as VITA, except for they have a wider scope because their volunteers almost are always a retired or currently working CPAs, financial advisors, all of those kind of things. VITA, they don't have that requirement piece, but most of them are going to have some form of financial background knowledge, or some of them are students who are in tax classes or business classes trying to figure it out. So there's lots of different options out there. The new one this year that I'm going to talk about is IRS Direct File. So last year was the first year they did it, and it was offered in Florida, but it wasn't made real big because it was the trial year. And as most of you probably know trial is always a little iffy. So this year they have decided it's going to stay and have expanded it to other states as well. But direct file does have quite a few limitations. It can only do income forms for W-2s, 1099s, Gs. It does not do any 1099 retirements yet. They're hoping to get that going. It does do Social Security and interest, but it does not do dividends or bonds or stocks or anything like that. And then it's also limited on the credits that it can have. So you can do your basic credits, your child tax credit, your credit for dependents, your earned income tax credit, your premium tax credit, your retirement contributions credit, and then your credit for the elderly. But that's kind of the limits. You also can only take the standard. There's no way to do itemized deductions. And it does have income limits. It varies a little, but if you're a single or married, single is 125,000. If you're married, filing jointly, it's up to 250,000. So it actually has a pretty good range. But I just want to let y'all know, if you decide to try direct file, if you're comfortable putting stuff in the system and you've previously used TurboTax or anything like that where you actually have to pay, I would say go try direct file first because it is free and it'll ask you 5 questions up front before you even start entering your info to make sure that you actually qualify for it. So even before you start, so it's not like you'll get halfway in and then it stops on you. It's another. It stops you before you get there and you can also use the free online. Those have different income levels that kind of keep you below. As you see on here, one of them is the AGI can't be above 73,000. So there's different things there, but there's always the old school paper. You can always print your forms, fill them out and send them in. And then of course there's paid preparers, whether that's virtually TurboTax. I can't think of all the different names. I'm sorry. I know there's a bunch of them. TaxSlayer, TurboTax, all the different ones that are out there. There's always different ones you can use, but know that the choice is best for you. I say look free first, and then if you need to go paid, there's always that option as well. All right. I see a couple questions in there. Any questions for me? Oh, I see somebody put the link in for me. Thanks, Cole. Yes.
The first one that came through was, can we put in money to a Roth IRA between April 15 and May 1st and still be considered for year 2024?
Oh, okay. So I don't know that offhand, but I do know exactly where to find it. So give me just a second and I will answer that one for you. What's the next one? So there's cutoffs every year. So that's why I don't think you can because you're asking because our deadline got moved in Florida. So typically that does not move the federal. So like that would be a stuck deadline for your Roth. But I will go double check that and make sure they didn't make a clause for Florida. But normally those kind of deadlines don't move. It's just the tax deadline that moved. But I will double check that one for you.
Some tax forms are mailed late. How do we know if I already received all the forms containing the information needed to fill out my taxes?
So okay, so you kind of know where your money is how I'll say that. So, the only one, so your W-2s and your 1099s have to be done by the 31st of January. The other ones have till February 15th to get things mailed. And then there's even some that have until March 15th to get it mailed. But most of the time you have an idea. If you have any investments and you're missing forms for your investments, that would be a red sign or a red flag not to file. If you didn't get any statements from your financial institutions, your credit unions, your banks, anything like that, if you have an online account, you can go look and see if there's any tax forms available for you. That is one of the good things now about us being very digital is most of our forms are available digitally. If you have student loan interest, that's one that's already available online. It may have not come in the mail yet, but it is available to be printed online already. So I would say like I said, you kind of know your finances. If you don't and you want to send me an email specifically, I can ask you specific questions to make sure that you have all the pages that you need. But it really is based on your personal finances.
Do you need your 1099 to file taxes? 1095, excuse me, 1095.
Okay, so 1095A, like for marketplace or healthcare coverage, what 1095 are we talking about? Are you talking about your B, your C, your health insurance, healthcare?
Healthcare.
Okay. Okay. So healthcare, the answer is you need, if you have marketplace, which is a 1095A. So marketplace, Obamacare, exchange. I'm trying to think of all the names they use for it because they use a bunch. If you have any of that type of insurance, you have to have your 1095A to file. There's no way around it. My system will not let me file. So if Miss Patricia, can I pick on you for a minute? Miss Patricia, if you had 1095A, you had marketplace insurance this past year, and I did your taxes and I hit submit and you had not given me that, mine instantly rejects it and says this client is missing a 1095A. So it knows, the government knows whether you had it, but your B and your C are not required. They just want to know that you had some form of healthcare, and almost all places are going to ask you that. What type of healthcare did you have? If it's an employee sponsored, they just say they didn't have marketplace and move on.
I'm also going to drop a link in the chat. We published an article a couple of weeks ago on the W-2 and 1095 forms that UF gives out. So like if you're an UF employee, you might want to kind of reference that.
Awesome.
The next question is, my son is a 9-year-old non-US citizen without an SSN. Does he have to pay taxes?
So children do not pay taxes. So no, it's only the parents that are gonna pay taxes. You don't, so I guess the mindset that to think about with taxes is you don't start paying taxes until you start making money.
Halie, I have a question about that. Can
Go ahead,
they
Laura.
claim it as a dependent or no?
So it would depend on, I would have to talk to that person specifically, Laura, because I would need to know exactly what the child has. I was trying to find it on here. Not a US citizen, no social security, but do they have an ITIN? That would be the question you would have to ask. If they have an ITIN, then yes.
Okay.
Because it's another way around this you could do. If they don't, then there may potentially be a way that we could, but we would have to look into that specific, because children are a little, you can't typically claim a spouse, but children are a little bit different, but it maybe go as a dependent versus a child. So that would be a particular case.
Thank you.
Mhm.
Okay. The next one is, if we put money on a Roth and later find that we don't qualify, the money we put in should be returned back without penalty? Should the money we put in be returned back without penalty?
So you're talking about putting money into your Roth. So most likely, and it depends on the agreement with that Roth, because that's where your financial terms get into there. But most of the time, it's just going to roll to the next year. So it wouldn't qualify for your taxes. And you would be penalized on your taxes if you had withdrawn from there. But I don't think you're saying you withdrawn. You're just saying you want to put it in to reduce your tax liability, which is fine. It wouldn't reduce your tax liability, but the money that you put into your Roth would probably not come back to you, because once you put it in, you're penalized to take it out.
Another question.
IRA too. We talked about Roth, but a traditional IRA, you're penalized to take it out unless you're at retirement age too. So sorry, just want to make that clarification.
Any other questions? There was one that came through about the resources. We'll email you guys the link to the video once the recording is ready on YouTube, and in that email we'll also include the links to the handouts that Halie mentioned during her presentation. So you'll have the recording and the handouts in the link, in the email, I should say.
So Cole, I'm not sure exactly what your thing was when you talked about the adjusted gross income. So some of the free sources do have different adjusted gross income limits. Like I told you, even the direct file one does have a limit, but it's higher than most of the free file ones, which is why they started the direct file. And then also VITA sites can have their own limitations, as well as AARP sites can, but that is done by each site. So it's normally a phone call to them and they can tell you where you can go.
I think I called 211, right? Or something like that, like to schedule an appointment with VITA.
So you can call 211. 211 is just local resources through United Way. But the easiest thing is actually to just go to IRS, Google IRS VITA or IRS AARP or IRS direct file, and it'll instantly pop you up all the links. IRS VITA will come up to a screen that'll ask you to enter your zip code. You enter your zip code and it'll show you all the VITA sites around you. So not just IFAS extension, but every VITA site that's available. AARP will do the same.
Yeah, I'm not seeing anything else come through. Haley, do you have anything else that you want to add? Or plug?
You can feel free if you have a specific thing. You can always email me. I'm more than happy to help with specific questions, kind of like the one about the child. We can definitely dive into that and figure out what your best route is. If you ever have any questions about specifically to your taxes, feel free. I would say if you're struggling with the taxes you owe, the IRS withholding calculator is amazing to help you kind of balance out what you owe versus putting in too much. And then your W-4 forms, if you need guidance with that, I'm happy to help with that too. There are documents out there, but I still don't think they're quite as helpful as they could be because the problem is most of us are used to the old way, and that 0, 1, 2, 3, 4 does not exist anymore. But we can sure help make sure to get you in the right place.
Well, thank you so much, Haley, and thank you everyone for joining us today.